day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else. But so does somebody who works on an oil field. The Cabela shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Delta Airlines has agreed to use Amazon satellites to deliver in-flight Wi-Fi service. The airline announcing in a statement, Amazon Leo internet service will be installed on 500 aircraft starting in 2028. It marks a big win for Amazon's space business as it vies with Elon Musk's Starlink for aviation customers. Of course, a lot can happen between now and 2028. Whoop is now valued at $10.1 billion for after a new funding round. I should say the company has more than 2.5 million members and was cash flow positive in 2025 with subscriptions increasing more than 100%. This comes as the company considers an IPO in the next couple of years. Catch my interview with the CEO of Whoop, Will Ahmed, at 11 a.m. New York time on Bloomberg Tech. And Unilever is combining its food business with McCormick in a deal worth nearly $45 billion. The agreement will give Unilever
So Unilever is making a statement that they are now going to be focused on personal care, home care, more so than food businesses. There does have this feeling of a lot of consumer deals recently, Chris. So I was just looking at the ones we got in about the past couple of weeks. Yesterday, your team reporting on Allbirds being bought by a fund that owns a bunch of different consumer brands. Pernod Ricard buying a Jack Daniels maker. Confirming talks with Estee Lauder. What's in the water right now?
Yeah, I think the consumer is just going through a pretty challenging period. And
I think it's a really good way to think about it is how these tools are actually years in the making, if not almost a decade. And these companies have been thinking about how to get growth, how to buy growth. Some of them have done smaller deals in the form of tuck-in acquisition. For instance, Estee Lauder has divested brands. They have like look at new brands for them, but then now they're really in the crossroad of having to think about what is strategic and what is transformative. And we're seeing that played out, especially because the economy is potentially coming to a downturn. And a lot of consumer companies are feeling the heat from their customers. Allbirds is a good example.
Well, I was just going to say, and actually this is away from Allbirds, so apologies for jumping in there, but did we make anything of the fact that this McCormick deal, Pernod Ricard, and Estee Lauder, that they're all cross-border deals?
Yeah, I think there is an element of that. I think just globally, food tends to be a pretty global business, as well as apparel and all of those other consumer categories because they're so brand driven. I think there's also an argument to be said that scale leads to money, and you can really diversify your company, your sourcing, suppliers. Those are all very good.
All right, Crystal, great having you on the program. Bloomberg Crystal team breaking the news on deals left and right. You can catch, by the way, the Bloomberg Deals program every Wednesday at 12 noon. New York Times. It's an hour-long program focused exclusively on M&A.
But it's pretty good.
It's pretty good. I watch it every week. It's interesting because the brands that Unilever will be left with, Americans will know Dove, the soap, and may know, I guess, Axe. Do we have that body spray, Axe?
Yeah.
It's very big in Europe.
Yeah, no, it's really close. It's like Lynx in Europe and Axe here.
Right. Okay. And then Persil,
But you think it's like a little bit of like the lipstick effect that maybe if times are tough, you buy white label food products. You don't spend up for the brand names. But when times are tough, you also spend on nice little luxuries. People go out, they still buy lipstick, they still buy personal care. So maybe this is also a safer economically kind of portfolio that Unilever's left with.
Right. You still need to buy your Tresemme.
Yeah, but
I don't.
Yeah, no, you don't. I was going to say if you're in GLP-1s, you still need Tresemme, but.
All right, let's take a look at what's going on with futures. Tresemme, by the way, is a shampoo for the who don't know. We're looking at big gains here after the Wall Street Journal reported that President Trump would be willing to just leave Iran without the Strait of Hormuz reopened, I guess without recovering the highly enriched uranium, without regime change, without unconditional surrender. That's just a report from the Wall Street Journal. And it's safe to say that Pete Hegseth made it sound like we're willing to go at it even harder at his press conference at 8 o'clock. But the markets are bidding up stocks on that journal report. So S&P futures and NASDAQ futures remain up more than 1%.
Up on the show, Cameron Dawson from New Edge Wealth says, why tell investors are looking through the war impact on earnings and the economy? We're going to explain more. She will join the show. Coming up next, this is Bloomberg Open Address.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. This, Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I know how the market day started.
Find out how it benefits.
Public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policies, how it all is impacting the US equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romain Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence of US markets? We'll see Moody's gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
Wall Street analysts appear optimistic as the war in Iran and that it will end soon after being burned by the taco trade time and time again. New Edge Wealth's Cameron Dawson says that the irony is that compared to all of those other disruptions,
Everybody has a moment where they put into action all they practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders? It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing. My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Batwa, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment, but I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Batwa. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A proven decision is always better than no decision.
You have to have three things right. And you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure. Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Batwa. Listen and watch on Bloomberg Television or wherever you. Newsmakers and market movers. This is the Pulse. Good morning. Good morning, everybody. Welcome to the Pulse. I'm Anna Edwards in London. President Trump has reportedly told aides that he's willing to end the US military campaign against Iran, even if the Strait of Hormuz remains largely closed. Now, this report comes from the Wall Street Journal, and it comes after Iran attacked a fully laden Kuwaiti oil tanker in the Anchorage area of Dubai's port, damaging the hull and starting a fire on board. Let's bring in Bloomberg Horizons anchor Jumana Basetcha to take us through some of the mixed signals that we've seen from the White House. Jumana, what do you make of the latest developments then? Because we've seen threats of further escalation coming within or less than 24 hours ago from the White House. And now this reporting that seems to be adding risk appetite to markets, suggesting that President Trump could be prepared to walk away.
That's right, Anna. So carrot and stick approach as usual coming through from President Trump. He's certainly been very vocal over the last 24 hours, lots of calls with journalists. But then also I want to refer you back to a Truth Social post that he put up around 24 hours ago, suggesting that talks were actually underway with the Iranian regime and that most probably there will be a deal reached shortly, he's saying. And one of the terms of that deal would be a reopening of the straits. And if that does not happen, then they would then have to resort to blowing up and obliterating, this is his language, all of their electric plants, their oil wells, and Karg Island. So this post is interesting because it actually links Iran coming to the negotiating table with a reopening of that Strait of Hormuz. Now, you fast forward, and overnight, of course, that's the Wall Street Journal reporting that actually the U.S. are considering delinking the two, i.e., perhaps winding down some of their military operations and bringing an end to this war, and then dealing with the matter of the Straits at a later point. And the hope there is that they could get to a diplomatic solution for the Strait of Hormuz, and if that doesn't work, then they would have to lean on some European allies or Gulf allies to get involved as well. So this is the first explicit, perhaps, delinking of the two topics. And of course, it is worth reminding everybody that a month ago, the Strait of Hormuz and control of the Strait of Hormuz was not an issue. This is a newfound issue, and we know we've been reporting about it over the last couple of weeks, that the strait is effectively shut and also effectively being controlled by Iran. About 80% of the vessels that have managed to go through over the course of this war are Iranian linked. And this is something that Iran has said that they do not want to give up. A week ago, when they published their counter terms to coming to the negotiating table with the US, one of the terms was exercising sovereignty over the strait. So it is unclear at this point how the question of the strait is going to be solved, even if the US and Israel say that militarily they've achieved a lot of their objectives in the war.
Yes, and before we got this Wall Street Journal report that seemed to add to risk appetite, Jemana, we were dealing with an attack on a vessel, a Kuwaiti vessel that was at port in Dubai. And that seemed as if it would be something, and in fact, it did add to concerns around shipping and energy markets. We saw oil prices.
Absolutely, Anna. And this is just a reminder that the war is still ongoing. It is day 32 of the war. There's no real de-escalation in terms of operations on both sides. The attack on the Kuwaiti vessel, which actually was laden with oil, it was actually holding oil, is just another representation of the fact that these operations are still ongoing. But thankfully, a couple of hours later, the Dubai authorities released an update saying that they managed to extinguish the fire. There were no injuries. None of the crew members were injured. And also there was no oil spillage. So perhaps alleviating some concerns about environmental damage. But what it does do is to serve as a reminder to ship owners and to any tankers wishing to cross the strait that it is not only costly because of rising insurance costs, but also very dangerous as well. And they do run the risk of getting attacked or targeted. Yesterday was a very good reminder that Iran can still inflict a significant amount of damage, even with their lower level or cheaper cost drones. And this is the leverage that they still have over the energy market right now, the Strait and the ability to inflict this type of damage.
Jemana, thank you very much. Bloomberg Horizons anchor Jemana Basetchi joining us there from Dubai. Volatility from the Iran conflict has now resulted in the single largest month of stock value destruction on record, with nearly $12 trillion in market cap erased across global benchmarks. Let's bring in Grace Peters, co-head of global investments strategy private bank, with us on set this morning in London. Good to see you, Grace. So it's a fast-moving story, obviously. It's only been a month and yet so much has happened. How fast-moving is your base case? How frequently are you having to revisit and reassess what you're expecting to see?
Yes, I mean, I think investors feel incredibly whipsawed. From one hand, there's the degree of, is the market too complacent because we are still seeing escalatory headlines. On the other hand, you've got the S&P now trading on 19.3 times, which is actually below the Liberation Day and below the 5-day average. So there's this tussle. When it comes to the base case, we think that if you see oil at around $80, $80 to $100 level, we think that the global economy will still grow, the US economy will still be in positive growth, and yes, you're going to have a stagflationary mix, but we still think the risk assets can do well. The risk scenario to us, which is our base case, is that you see oil move north of $140 per barrel, and that to us would be a recessionary environment where the Fed would have to react far more vigorously, probably cutting rates about 100 basis points in order to support growth and find some assets.
And that takes us into the inflation dynamic, which I know you're watching carefully. We're watching it today because we've seen, yesterday, a lot of commentary around inflation from the Fed and gradually a picture of the Eurozone inflation story being built up as well. So from what you're saying there, Grace, are you expecting then that central banks will hike with inflation concerns and then have to cut quite rapidly as growth concerns materialize?
I think the ECB and the Bank of England are in a position where they're going to have to hike rates because I think you're going to see swifter inflation pass through, but then weaker growth dynamics, as you say. The US, I don't think the Fed will need to hike. I mean, the inflation expectations over the long term are still pretty anchored, but I would say inflation and inflation volatility is something that investors absolutely have to grapple with. Our three themes for 2026 were artificial intelligence, security, and inflation, because we do think that portfolios are not prepared for a world of heightened security issues, a focus on economic nationalism, and more inward turning around self-sufficiency, which in itself can be inflationary and indeed can bring back concerns over deficit spending, which again the market seems to have forgotten about in whilst it's focusing on geopolitics.
Yes, and you mentioned three things there, two of which sounded as if they would be negative for stocks. Certainly some of the geopolitical tensions can be, maybe inflation is, maybe global fragmentation is, artificial intelligence may be positive, but you say that equities will prove to be more resilient than news headlines suggest. So yes, you see the underlying source of optimism there.
Yes, I think so. I think when we look at the corporate earnings picture, I mentioned 19.3 times forward earnings for the S&P. That's because the market is questioning whether the earnings can continue. And so typically what you see is on peak earnings, the market will try and do a trough multiple. And I think that's what the market is trying to figure out at the moment, because earnings so far remain resilient. And we do think that that will remain the base case, with broadening through the S&P, if we stick with US, driven more by the AI value chain. I think I do make the point of saying the AI value chain. I don't think it's just the hyperscalers. I think when we're looking at the inflection point we believe that we're at now in AI adoption, this is something that's going to spread through, the whole market, many sectors of the market. And so whether it be industrials, utilities, material stocks, we think these are great complements to technology, or indeed the financial sector as well, which has actually underperformed this year, and we think is an entry opportunity.
Do you think, though, thinking about AI and the whole value chain there, do you think that higher energy prices threaten some of what we have will be delivered by AI, and by when?
Yes, I think to some extent, obviously, energy prices, and this will be more pertinent for European-based and UK-based companies, it could threaten some of the margin story, but we do believe that the productivity gains that you're seeing coming through will ultimately support corporate margins. And so that's why we maintain a more positive view on equities. But to your point earlier, Anna, I do think the market is very focused at the moment on the inflation dynamics. And so when we're thinking about shorter term, more tactical opportunities, that actually point to fixed income. So as the market is focused at the moment on inflation, I mentioned I think it's being a little bit complacent over deficit concerns, which I think could re-emerge, particularly if more spending is needed by governments, and governments would be reticent to give that money direct to the consumer, because that could cause more inflationary issues like we saw in 2022 and afterwards. So I think government spending is going to be directed more towards investment in self-sufficiency, which in itself could be long-term inflationary. But I think in the shorter term, when you've seen this big spike, particularly at the front end of the curve, we've got a lot of clients still in cash. So for me, a more tactical opportunity as the market switches from an inflation focus, perhaps more to a lower growth focus, is to lock in rates at the front end of the curve. And the second opportunity I see in the short term is really around gold, which is still down some 10% from peaks, but I think will prove to be a good asset to hold in a world where we see geopolitics is not going away at any time, and nor is deficit spending.
Yes, so just talking a little more about what's going on then with bond markets, given what you've just said there, Grace, and you point out that deficit concerns are going to be something that perhaps comes back. Does that, because the focus on growth just over the last couple of days has actually brought yields down a little bit, because we've seen bond buying, whereas a focus on deficit spending might push those yields up again.
So you've got curve steepening more likely to play out. So I think is particularly in the US, when we think about the front end of the US Treasury curve, and we saw comments overnight about long-term inflation expectations still being anchored, which supports what we saw in the University of Michigan survey, then I still think you can see, and there's still a small amount of a hike priced into the US rates curve, and we think that the Fed's going to be on hold. And if growth does weaken, there'll be potential and political pressure certainly to cut rates. So it's primarily focused on the US, but I think even within Europe and the UK, there's a good opportunity at the front end of the curve. But we are sticking, within 3 to 6 years, because we think longer term, as I mentioned, curve steepening is a potential consequence when it comes back to repricing, not just inflation, but also deficit.
Gracie, are we witnessing investment becoming a more geographically ring-fenced activity, more region by region based rather than global?
Jobs openings released 10 minutes ago, less than previous. That leaves the last quarter. It's only 6.8 million as opposed to 7.2 million. Fed services 10:30, but yeah, weaker news here. Weaker jobs report this morning. And inflation for the manufacturing inflation in Chicago is down this morning as well.
Action. So that, to us, that's infrastructure assets. You want less correlated or uncorrelated return streams. To us, that's hedge funds. And so our core portfolios are allocating 10% to hedge funds funded from fixed income, which we think gives you a much better risk-adjusted return. And then hard assets, commodities, gold, I've mentioned, we think that, whilst that's obviously been sold off recently, we still think there's a structural story to mean that gold will appreciate over the next 12 months.
Okay, thank you very much. Thanks, Grace. Thanks for coming to talk to us. Grace Peters, co-head of Global Investment Strategy at JP Morgan Private Bank. Coming up on the programme, why tech companies are ditching Europe for foreign exchanges and how
capital markets can bring them back. We will discuss with UniCredit's head of equity capital markets. That conversation is next. This is Bloomberg.
Imagine being able to build Meet Base 44, a complete AI creation platform made for anyone with an idea and a drive to bring it to life. Let's make your dream a reality right now.
Heard an online MBA recognized for real salary growth at Wake Forest.
Welcome back. This is The Pulse. Now, after a relatively quiet start to the year, the war in Iran jolted markets midway through the first quarter. With no clear end in sight, the conflict is driving volatility and clouding the outlook for the second quarter and no doubt beyond. Joining us now with his outlook is Rod Turnbull from Bloomberg Intelligence, with me on set here in London. Rod, good to have you with us. Thank you for joining us. So help us take stock of where we are now. What are some of the key barometers that you're watching in the markets?
Yeah, sure. A week ago when we spoke about this, it was looking at major equity markets. Of course, over the course of that week, we've seen a little bit of a change. So those major indices now pushing towards support levels, flirting with them, or downright broken down through them. And I'd point out the Kospi today as a particular market of concern, and we can come on to that later. But when we stick to Europe, markets on about 14 times earnings. We think that's about fair value according to our equity strategist. Consensus is estimating 9% earnings growth for the year. We think that's maybe a little bit too high, more like 5 to 6%, but we'll see how that plays out over the course of the earnings period. What that means is there's been a little bit of a reshuffling of the deck, of course, having started out that quiet part of the year to a little bit more noisy now, and an awful lot more exposure into the energy complex, big oil, utilities, and basic resources. So those have been the sectors that have seen some performance, obviously, this year. We've done a lot of research on it. We're just looking at exposures around it. And actually, we've got 2 reports out today. One looking at oil demand destruction, which would be quite interesting, and the other about 20 companies globally that are affected by this. But specifically, if we look at regions, North America would be an advantage place. So would Russia, so too Iran, and equally Norway. Asia, a little bit more of a struggle, and that'll come out in the research that we've written today. And then when we think about the metals complex, if you've got copper exposure, probably not great. So that's more like an Anglo-American, who's quite leveraged to that theme. Or if you are more aluminium or coal exposed, as Glencore would be, that's probably a little bit more of an advantageous position. And maybe the final thing to leave it on there is defense. Which again, started off the year as a market darling. We saw a spike around the time of the Venezuela crisis. That has dissipated.
Yeah.
Stocks, particularly the really European-focused names, off about 24%. Multiples still quite high.
Yes.
Not sure why the market's not too enthused at the moment.
Yeah, some of those German names caught up in that selling. And talk to us about the opportunities then. What are the opportunities, relative opportunities that you're looking at as the market adjusts to the conflict?
Sure. Okay, we'll still probably see that adherence to what's safer just now, but really thinking about what are those ideas when we get to an off-ramp. And there in particular, we're looking at stocks that were maybe a little bit dislocated, unloved, undervalued as they were going into this crisis anyway. First and foremost, and I think it's making a bit of a flutter today, is SAP. It's one of our focus ideas. Anurag is the analyst. And what he's essentially saying is we're looking at mid-teens constant currency growth, so a little bit better than the market. They generate a lot of cash, should have return to shareholders, M&A, and of course the enterprise business within SAP is a thing that makes it sticky and interesting, that should deliver and make it a little bit more AI resilient in some period.
Let me try for this. Not too
Consumer, obviously, in the press today, pairing is one that we quite like. Restructuring story, we see about 10% earnings growth or revenue growth story this year, or more than the market is currently estimating, and Ferrari likewise in that little luxury space.
Okay, so some room for some of those luxury names. Rod, thank you very much. Thank you.
Yeah.
Bloomberg Intelligence Rod Turnbull, more available, of course, on the Bloomberg terminal. Now, a tech exodus has seen around $1.4 trillion drained from Europe's economy over the last year.
Aggressive buyers in here.
Continent.
You need to swing up.
Exchanges or fall to foreign takeovers.
I'm gonna get taken out first here because it has to rotate back. Most likely, they're not going to get entry again.
Uncertainty exacerbated by the war in Iran. We're joined now by Sylvia Viviano, head of equity capital markets at UniCredit, to think about where the IPO story long term goes from here for Europe. Sylvia, thank you very much for joining us. So there's a couple of different time horizons, I suppose, in my thinking right now. There's one, that big picture narrative we just painted, a past decade story of what's happening in listing in Europe. It's very much clearer now, the past months, the volatility we see in what it's doing too.
So aggressive buyers from the Delta.
Sylvia, how can Europe
That's not an entity. I didn't get the best entry.
such volatility? What are you hearing?
We're in.
Thank you, Anna.
No.
Is the most tricky one.
Swinging.
Because what I'm saying
It's swinging.
is something completely different tomorrow. We are currently subject to an increased volatility, macroeconomic
Please stay up, stay up.
events that are happening that are completely out of our control. And 2026, which started with a very solid IPO pipeline, a very positive mindset from investors, and
Just broke even.
for new market, has now turned into a
Here it is. Here's the level. There's the level.
reality is that, we started 2026 with a very strong and relevant transaction like the CSG IPO. Pipeline was solid. As of today, defense and energy companies managed to do the IPO. Clearly, we need to understand a bit better.
Another opportunity on NASDAQ here to rotate.
Few weeks or a couple of months before even other companies are in the IPO market here in Europe.
Yeah, so if we're in a wait and see mode, Sylvia, if we can see our way through that, and if we get to calmer times ahead, does it seem likely
It's the entry on NASDAQ.
infrastructure plays coming to market to list rather than other sectors?
We have an inside bar close on gold here. That we get entry.
We are still out in
But NASDAQ is rotating back down.
phase for possible IPOs in the market across summer or just after summer. Investors' appetite
Stayed up the standard deviation. Hit standard deviation, and that would have been a great short. Let's see if we can get an entry here.
The US are still willing to deploy capital and willing to do the exercise and the work around companies that are planning an IPO. So I'm still positive that if things take a turn, a bit more, stable situation in the markets, and the Iran war is going for the best, then I'm still positive that we're going to see big IPOs in the market in Europe.
So we took the absorption out here. Here's an absorption, another absorption. Buyers got absorbed here. Once aggressive buyers came back and took this, that was a
Sylvia, does it make sense?
big opportunity here at the open.
Space is the right place for defense.
Wow.
Because one of the fast growing
Almost
of the last decade
over 30,
was, well, either
37, almost 38 point move to the upside.
I think European defense, we have seen so many cases now coming to the market.
These are A+ setups.
We have got in IPO, all very risky.
Trapped here.
And the banks are working.
Buyers get trapped again.
Defense
Aggressively coming in
very limited
and then being absorbed. And then
for obviously the reason
you got to look at this range here. We stay above VWAP. So this is value.
The future that this
A
company
lot of volume here.
of growth and in terms of
Major participants in this area, this region. And then aggressive buyers come back with conviction. And there's your trade of this is a trade of the day. Rotating back down. These aggressive buyers are stuck.
And sustain the production of all
Stuck here.
Supplies that are going to be needed in the years to come. So yes,
Stuck there.
And Sylvia, what does
hold this range, this level here.
It's just been showing some.
This is our new 4-hour candle that's starting up, and we're inside this.
Savings and investment union, the 1 year market agenda seems to be being talked about. What's left to do for Europe?
And share.
I think there are two different aspects we can consider, right? One thing is in terms of execution. I think the CSG and IPO and lately they've encouraged IPO.
We're really paying attention to these stock buyers. Can we stay within this range and go back up?
There is
Or are we gonna
execution.
check down?
You need to make sure
Nasdaq just went back up. Strong, some aggressive buyers just came in.
of the execution as much as possible. And it is more of a practical new way of executing transaction. The second aspect
Now gold is going back up.
we had the March 2026 European Council that
Just taking profits here. The buyers are just taking profits here.
2027 are the latest, and what are the expectations in terms also from a capital markets union that they have, and actually a real action that needs to be taken, results that need to be delivered.
I see weak sellers. If I see weak sellers, I can get an entry on gold. Nasdaq is strong still. SPX is
Joining us, Silvia Viviano, UniCredit's head of equity capital markets. We will get up to date on the war in Iran next. This is Bloomberg.
SPX is stretching the VWAP. Trying to go up. It's a bullish day. The bulls have woken this morning.
Good morning and welcome to the Pulse. Now the Fed was in London, and these are your top stories. Oil swings with President Trump reportedly willing to end the US military campaign against Iran, even if the Strait of Hormuz remains largely closed. Gasoline in the US climbs above $4 a gallon for the first time since August 2022, one of the most visible measures of consumer pressure in the US from the Iran war. Plus,
This buyer here,
fears of an imminent
since it could not displace the seller, is closed inside, shows weakness. This market could easily rotate back before finding another move here.
Told us that he is willing to end the military campaign against Iran.
This is very weak. Weak buyers here on gold.
The markets are doing with this latest round of reporting. Let's get to Liesl Hill, Bloomberg's managing editor for commodities and energy in Europe and the Middle East. Very good to speak to you, Liesl. So the latest comments then from the Trump administration seem to be of this ilk, suggesting that maybe they could step back from the war, but still with the Strait of Hormuz closed, that would clearly have impact still for energy markets. What do you make of the fact that we see a little bit of a little calmness perhaps in oil markets despite the implications of that kind of strategy?
Yeah, it's interesting. I think there's probably a few different ways to kind of get at it from the oil market perspective. There's a lot of focus in the markets on potential damage to energy infrastructure. We've seen missiles and drones. We've seen hits on oil refineries. Obviously, the big Qatari liquefied natural gas plants with missiles, and so when we see that damage, it's a kind of significant damage. There is the implication that supply supplies and the is much more prolonged even after the storm. So if it was an end to the conflict, I think that could potentially be positive for the supply because that takes that risk away.
On the other hand, if the Straits of Hormuz remains closed for a prolonged period, then that means that percentage of supply remains shut in for a longer time. Yeah. So you've got those kind of competing factors. And then I think there's another element where there's maybe a little bit of fatigue or resistance creeping into the market to the president's comments, where in the first few weeks of the war, of course, every time he came out and said the war was about to end, we saw sharp moves. But as you say, today we're just seeing these sorts of, small moves up and down, but we're just kind of hovering around 106 odd barrels. Yes, on Brent, and certainly small moves by recent standards when it comes to the oil price. And we also saw some of the key developments over the past 24 hours, an Iranian attack on a Kuwaiti tanker that was docked. It was fully laden and it was docked in Dubai. I mean, a clear reminder that for all of this reporting on escalatory, de-escalatory, the conflict is continuing, and that is still having an impact on the ground on the inability to get shipments out of the strait. Yeah, I think that's exactly it. This was one of the more significant attacks that we've seen. It was a fully loaded vessel. The hull had some damage. There was a fire that was out. But again, I think the market response has been a little bit this focus on real supply as opposed to the kind of directional headlines. And so we have seen just a smaller move in the market on that. And then we add on top of that, so in fact, we got a red headline just within the last hour that US average retail gasoline rallied above $4 and this according to the Automobile Association in the United States. I mean, people are often asking what is President Trump's reaction function based on, and sometimes it is speculated that oil prices, the PPI above $100, gas prices of $4 a gallon. These might be the kind of things that he is looking at ahead of the midterms. I mean, give us some context around that figure price. Yeah, I think that's right. Our understanding typically has sort of sharpened minds in the US political.
This is exactly why you never try to predict the markets, because you think this is weak. It looks weak. Delta showed weakness, but I guess because it stayed above the 50% level on this really strong bull, stayed in that range. EOC here, a lot of activity, and goes up. Went back up.
Liesl, thank you very much. Thanks for joining us. Liesl Hill, Bloomberg's managing editor for commodities and energy in Europe and the Middle East. Let's stick with the subject of war.
We have an opportunity on NASDAQ here.
Nuclear weapons.
Yes, we do.
The US and Israel refuted such claims. With talks broken down following the escalation of war, what will Iran
go short here?
Future? There's a lot to unpack here. Let's speak now to Daria Doltakova, who's Senior Fellow for Proliferation and Nuclear Policy at RUSI. It's still very much a conversation that is often fully understand, it seems, the extent to which the two sides are in contact and having discussions. But what do we understand
for possible rotation?
Just last summer, the Trump administration said they'd been obliterated, but clearly they felt there was work still to do.
POC.
We know now.
Well, so there's been a lot of confusing messaging coming from the administration on their assessment of the state of the Iranian nuclear program.
I just need to get to break even here. No, not yet.
To understand where the Iranian nuclear program is, really use the International Atomic Energy Agency. So they, prior to the attacks in June, had some access to the Iranian nuclear program, could assess more or less where the program was. After the June attacks, they had lost whatever access that they and now they have no access to it. Their assessment before the June strikes was that Iran was accumulating very large amounts of enriched uranium, and they were enriching it to a point that frankly doesn't really have a civilian explanation. So Iran's program was a considerable proliferation concern. At the same time, they and the US intelligence community had assessed
we get there.
Actually have a systematic weaponization.
Take this bull candle out and we can really rotate back down here. You gotta take this bull out.
Talking to new leaders in Iran, it isn't clear.
We have to close here.
Might be, but
close bear here. We should be good in good position to trail. We are. Yes, we are. In trail for the rotation.
On nuclear proliferation.
Yeah, and I'm afraid that actually the leaders that are in Tehran now, or the direction in which Tehran is moving politically,
even position. You cannot lose this.
So at the end of the day, it's the supreme leader that has the final say on nuclear.
So close to our target.
supreme leader, the son of the old one, Moshtaba Khamenei. We've not actually seen him publicly. We don't know what his position is on the nuclear file, but we do know that he historically has been a little bit more, let's say, hardline on some issues. And it seems like there is more and more of a role to play for the IRGC, for the Iranian Revolutionary Guard Corps.
It's broke even.
Sort of the hard line of the spectrum within the Iranian.
Good entry too.
It's clear which way the government will want to go into Iran, but the signs point to the fact that the government is challenging interlocutors, and they said before the war.
Okay, that's interesting, and it's quite difficult to work out who is being talked to and what strategy they might adopt. If we take a step back then, Daria, and think about about the nuclear age that we are now in and how you would characterize it, because we've seen quite a pivot from a period where security
Goat can target the Goat's going for the POC
arsenal, and now
good level.
Europe's done within Asia saying they want their own weaponry themselves. How would you assess the pace at which that conversation is moving?
Yeah, it's a really challenging time for counter-proliferation and non-proliferation efforts. So, precisely as we said, historically in Europe, we've been under this US nuclear umbrella, but also the United Kingdom and France have nuclear weapons, and our European allies have largely been content that that would be sufficient to guarantee their security. Now, with a more aggressive Russia, shifting political messaging from the US, including direct threats against European allies, that has now come under question over whether the United States would actually be willing to use its very large, diverse nuclear arsenal to deter an aggressive Russia. So that has sort of spurred some conversations around additional rearmament in Europe, which I think is
nice little swing rotation.
certainly some conversations, granted a bit on the fringe still, thankfully.
Should have bought this one. This bull took these bears out.
So Poland,
I mean, both of these bears
very
kicking out.
So would you suggest then that the non-proliferation
Stock just swung back up.
fringe activities at play?
They are, but they're fraying, and I think the war in Iran isn't helping that situation. I think countries that might have perhaps been debating the possibility of potentially moving towards a nuclear weapon capability or even a hedging capability. So
Sea level here.
could move towards
Look how price reacts. I mean,
to do that. They're looking at the experience of Ukraine, which
there were sellers just waiting here and thought it was as good value.
They're looking at North Korea, right? Just wondering what kinds of lessons they're drawing and would be worried if they're not the right one.
And how is the US view
Look at
proliferation?
Nasdaq is showing weakness. We can get a short here on Nasdaq.
At the same time, our reporting is suggesting Saudi Arabia with enrichment and reprocessing technologies, as if there is some rethinking of the extent to which they are comfortable with proliferation.
Yeah, so this conversation about a civil nuclear program in Saudi Arabia is long-standing. It's been going on for years. It predates the Trump administration. Now, what
you don't see any trapped participants here.
So there hasn't been an agreement to transfer over
Here on gold.
technology yet, but my understanding.
It's this one. We missed Nasdaq.
Now that would raise questions over what message that sends
That
can have your program
manipulates upwards.
domestically, and that's kind of the message that we've been sending to Iran, that yes, you're welcome to have nuclear energy, but you don't need enrichment. So if you now start transferring, the US starts transferring enrichment technology to Saudi Arabia, that if they do decide to go that way, that would raise questions around, again, that double standards in the region.
Yes, and some people asking questions about the extent to which monitoring will be able to take place in Saudi Arabia. Do you have any thoughts on the IA statistical whether they should be applied in Saudi Arabia then?
Yeah, so
PX is not rotated back.
and I think the United States understands that.
Usually, if it goes too far,
To what extent? So the additional protocol is
the standard deviation, it likes to come back towards VWAP, but it has not yet. It's trying to.
Safeguards agreement it includes with most countries, with nearly all countries. So Saudi Arabia doesn't have an additional protocol concluded yet. So depending on which way the civil nuclear cooperation conversation goes.
So we were correct on shorting Nasdaq. It's just the manipulation to get some liquidity first. Swing, grab that liquidity up here. Boom. Yeah. taken down.
Nuclear policy at risk. Let's get up to date at 9:42 here in London on some of the other stories that we are covering this morning. The UK's motor finance industry is expected to pay about £2 billion less for a revised compensation programme for consumers who were missold car loans. The Financial Conduct Authority says lenders should expect to pay a total of £7.5 billion with fewer loans now eligible. It should come as good news for affected firms, including banks such as Lloyds and car firms with lending operations such as Mercedes-Benz. Exports to the US slumped in the second half of 2025 as tariffs raised the prices of products from whiskey to infant formula. According to the UK's Food and Drink Federation, the value of British food and drink products shipped across the Atlantic fell 8.6% from a year earlier. It comes as the British Retail Consortium, the BRC, warns UK shoppers should brace for a wave of price increases at home due to the energy.
Are these bulls going to protect this range, this level?
Prices and disruptions caused by the escalating conflict in the Middle East. The official Purchasing Manufacturing Managers Index reached 50.4 in March versus 49 last month. China's manufacturing is exiting a 2-month contraction after the government ramped up spending at the start of the year. NASA is preparing to send astronauts back to lunar orbit for the first time in more than 50 years. The upcoming Artemis 2 mission will carry 4 astronauts on a journey around the moon and back. In today's Big Take story here at Bloomberg, we look at the costs, the delays, and the risks behind NASA's return to lunar exploration. And we're joined now by Bloomberg's Kate Duffy. Kate, good morning to you. So what can we expect then from this mission? They're not going to land on the moon, they're going to fly around it. But what are the challenges that they're looking at?
Yes, as you say, this is a 10-day mission with 4 astronauts on board a Boeing SLS rocket, and on top of it sits the capsule made by Lockheed Martin. So yeah, this is a 10-day mission. They're going to be carrying out scientific
for a short on NASDAQ now.
9 support systems of the spacecraft. The challenges are there are some, definitely. This is the first time that that they've sent humans back to the moon in more than half a century, and also the first time that they're putting humans on this kind of spacecraft for the Artemis mission. So space is obviously a very harsh environment. It's very different conditions to Earth. So this will really test the technology from the rockets to the capsule and basically prove that NASA can keep astronauts alive in deep space whilst flying around the moon.
Okay, so 10 days, and that's what they're trying to do. Those are the things they want to prove that they can do, Kate. This has been a project in flux. What are the changes that have been made to the programme along the way? And I guess there could be more to come.
Yeah, absolutely. I mean, this program has come under extreme criticism from politicians and the like, just because of the amount of cost that has been accrued. It's expected to amount to about $93 billion. But there are developments along the way. NASA is in contract
much weaker than gold right now.
3, 4, and 5. There are still question marks as to how those missions are going to unveil. But essentially, NASA wants to put humans back on the moon before 2028. And this is coming under increased competition, essentially, because we're waiting for China to also put their astronauts on the moon by 2030. So it's really turning into a geopolitical race as well.
Okay, and because this moves fast, ask the next question, Kate. What happens with next then? What comes next? Artemis 3.
Next is Artemis 3, you're right, yes. So this will, Jared Isaacman, who is the NASA administrator, unveiled last month that in fact Artemis 3 will be tested next year. So this will see, it will obviously be a step up from Artemis 2, and it will see the spacecraft essentially attach itself to the lunar lander in Earth's orbit. So again, this will put the technology to the test, taking this program a step further in order to be able to put humans back on the moon in the future.
Okay, thank you very much. Bloomberg's Kate Duffy with the latest on that launch, set to take place a little bit later on this week. So we'll certainly be looking ahead to that, and no doubt have plenty of detail on the launch here on Bloomberg TV. Coming up, as war continues in the Middle East, which economies stand to gain and which to lose? Let's talk about China. Diana Toy-Labour joins us, Chief Economist at Inodo Economics. This is Bloomberg.
It seems like everyone's rushing around, but when we're behind the wheel, no speed.
A few minutes saved is never worth the risk. So just plan ahead, follow the speed limit, and enjoy the drive.
Because taking your time on the road means we're going to be around for each other.
Proven okay, you got snacks? And that's what road trips are all about.
All right, kids, you ready for the road trip?
Yeah.
All right, let's go.
Oh.
Bloomberg has a report under surveillance.
Right now, the headline bad news is bad news.
This is a citation.
Squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne Marie, and Mike
Wrong on that one.
for analysis at Terminal T.
Break even, and then a loss.
What's happening present day? 7 months out.
0.5% there.
March jobs report. Friday on Bloomberg.
Energy shocks have
So get that loss back from gold here.
monetary policy works with long and variable lags, famously. And so by the time the effects of a tightening in monetary policy take effect, the oil price shock is probably long gone, and you're weighing on the economy at a time when it's not appropriate.
That was the Federal Reserve Chair, of course, Jerome Powell, speaking at Harvard University about the potential impact of the conflict on the US economy. So as the war in Iran continues to escalate, economies across the globe are reeling from its impact. China and Europe are in the spotlight as major energy importers, along with other parts of Asia, in fact. We're joined now by Diana Troy-Laver, Chief Economist at Enodo Economics, with her perspective on all of this. Diana, good morning to you. I wonder where you think the pain for China will come in terms of higher energy prices, imported energy prices, because China had actually been stocking up on a lot of energy products ahead of this conflict. So how exposed or insulated from it are they?
Look, China was struggling with deflation as well. And as you said, had stockpiles. I think it's also important to realize that they have a lot of policy levers they can administrative control they can implement to lessen the pain. And of course, it depends. But the interesting story on China is that they were exiting the deflationary spiral, and our forecast for this year was an inflation surprise even before the Iranian war. So with Iran on top of this, we have doubled down on our off consensus call that China will surprise markets with an inflation story. Okay, over the course of this year.
Okay, so they're getting a boost to their efforts to exit deflation by the war, not perhaps the boost they'd wanted, but you're saying that actually they were on their way to it already. Are they going to be doing anything that will stimulate domestic consumer demand? Because that seems to be the missing part of the jigsaw in China.
They have been doing a lot since September 2024 in getting consumption going, but it's difficult. I mean, actually, the potential growth rate of China has plunged. And so when they try to achieve 5% or 4.5% to 5% as they have committed to, already with
Get some back on gold as well.
the level of output about potential, you would like to see domestic inflationary pressures.
Oh, sure.
So in that sense, it's a difficult binder into. They've committed to this much higher growth rate at a time where most likely, and we've seen that in the bottoming out of deflation, commensurate card to play. If it had used
Now it's moving.
that would have been a much bigger
Takes you out, then it moves against you. Takes you out, moves against you.
controls have been slower and China managed to go around.
Oh, and get the right entry.
Trying to do it. And I definitely, when I woke up to the news of Venezuela at the start of the year, instantaneously my next thought was Iran is next. Because if you get Iran and Venezuela together with US allies, the US controls 60% of the oil flow and 70% of reserves. And it is in an immediate way. So, with getting that control, the US could negotiate with China and secure a reliable, durable supply of rare earths that it needs for industrialization in a way that wasn't possible before. And while that might have not been the reason, it certainly tells us what's likely to happen with the war, if that is one of the objectives.
Diana, really interesting place to leave the conversation. I'm sorry we don't have more time. Diana Troy-Labour, Chief Economist at Inoto Economics. European equity markets then are on the rise. US futures also looking pretty positive, also off earlier highs, but still in positive territory. The brief is up next. This is Bloomberg.
Are more than just a
Right, from London, this is Bloomberg Daybreak Europe. I'm Molly Glenn with your top stories. It's about good morning. This is her.
Just got wrecked on NASDAQ. Rotation back down.
The report by the Wall Street Journal sends U.S. futures and trend higher and oil sliding as investors think it is a sign of possible de-escalation. Meanwhile, Asian stocks are on track for their worst month since October 2008. But despite talk of possible de-escalation, the attacks continue. Kuwait's state-run oil company says Iran had
1% on NASDAQ.
Iran's oil
Pretty much broke even on gold here.
8 a.m. across the Emirates. I'm Joanna Versetti in Dubai. Another flood of headlines to wade through this morning. But what I will say is markets are reacting to Wall Street Journal reporting, suggesting that President Trump is considering an end to the military operations in Iran, even if it means the strait is still closed. So effectively there, he would be looking for a diplomatic solution to it. We're going to be discussing all of this, what it means, and the very that have come out of the White House over the last 24 hours. But the point is, the markets are reacting to this Wall Street Journal story. We can see here, equity futures are actually in the green today, up 0.9%. Investors accounting for a possibility of a diplomatic breakthrough or indeed of an end to the war. So this is something that is being accounted for as positive risk assets, positive reaction risk assets this morning. And Brent, take a look there. We saw a little bit of a dip once that Wall Street Journal story came out. We're trading at around $107, but still a reminder of the effective control that Iran still has over the strait. And they did actually target a vessel that was just off the Dubai coast, which is a Kuwaiti vessel, in the early hours of this morning. So just a reminder, really, of some of the risks on this point tankers cursing want to pass through the strait. So 107 is where we are for brands. 10-year yield sitting at 4.32. We've rallied Abraham and Singapore, so much.
Down 1% on NASDAQ and broke even on gold today.
The report